In this video, I'm going to discuss black-owned stock portfolios. So, since a lot of events have transpired since the death of George Floyd, a lot of renewed interest, I guess you could say, has been made in black-owned stocks. In other words, stocks that was founded by black CEOs and the like. And many people have a question as to how many black-owned stocks are there? Are they available on Robinhood? And exactly what are the metrics? What's the market looking like for each of these stocks? Now, one of the most famous stocks you may have heard of that is black owned is called Urban One. And Urban One also owns TV One, which is a cable station. And it used to have the Roland Martin show on there, I believe. But that's probably the most famous black owned stock. But you also have two big healthcare stocks. You have Global Blood Therapeutics and you have Axon Therapeutics. And those two stocks have done very well over the years. And now I'm going to share my screen to show a portfolio that I came up with and that I examined of black-owned stocks. So let's see if this is working right. All right, so I put it all into an Excel spreadsheet. Well, this is really Google Sheets, but basically it's in an Excel format. So you have the RLJ and you have two urban ones, Broadway Financial, Ping Identity, Axon Global Blood Therapeutics. That's the ones that I mentioned earlier. Then you have Harmony Gold, AngloGold Ashanti, and Jumia Technologies. Now, if you notice, in the yellow I have excluding, and in the red I have including. So what this means, including means all of these stocks. So as you can see, over 5 years and 1 year, it's outperformed VOO, which is the S&P 500 general market. So that means that these stocks over the past year and over the past 5 years have actually done better. These 10 stocks, if you were to put an equal amount of money into each of these 10 stocks, they would have did better than if you had put that money into the S&P 500. But when you look at including versus excluding means all of these stocks except for AngloGold and Jumia. And I'm going to explain in a minute why depending on what your definition of a black-owned stock is, will determine whether AngloGold Ashanti and Jumia truly count as black-owned stocks. So RLJ Lodging Trust, I'm actually going to look it up to show y'all uh, who is behind it. So you can see it was founded by Robert L. Johnson. And it's headquartered in I think Bastida, Maryland, if I'm saying that correctly. But if you notice, this may be a familiar name, Robert L. Johnson. This is the same man who founded BET. And they own several shares in, if you've ever stayed in Wyndham Hotels, they own a lot of shares in Wyndham Hotels. And you see, they used to have a higher dividend, and a dividend is basically when you hold stock. They give you a certain amount per share that you own. The dividend used to be higher, but if you come back here, you'll see that over the past 3 months, it's done really, really, really well. It's done better than all of these stocks except Jumia. But over 1 year and 20 years, it has done not so well. However, back then it had higher dividends, so that may have made a lot of the difference. So you see, the next that you have is these two urban ones underneath the RLJ Lodging Trust. And these are just two different classes of shares that both belong to Urban One. And actually, I'll just look up Urban One for y'all. They also own some radio stations that used to broadcast shows like the Tom Jones Morning Show and Steve Harvey. It's founded by Kathy Hughes. She is a famous black female entrepreneur, and I think it was the one of the first, big African American owned media conglomerates. And it is based in Silver Spring, Maryland. And as you can see, their subsidiaries is TV One and I Own Digital. And I'm pretty sure, if I recall correctly, TV One now is in most households on cable. And then you have Broadway Financial. Now, Broadway Financial is a black-owned bank that I believe is based in California. Let me just check right quick. Yes, it's based in Los Angeles. So I believe Broadway is the only black-owned bank in California, and so you can buy shares in it, and it's also listed on the NASDAQ Small Cap Index. So if you want to invest in Broadway Financial, but you want to have more diversification, you can buy the NASDAQ Small Cap Index ETF, and you will have some fraction of that go to Broadway Financial. So next we have Ping Identity. Now, Ping Identity is probably the best company of all on this list simply because they're in the tech industry, and the tech industry has performed really well over the past 20 years, I would say 25 years. And it was founded by Andre Duran in Denver, Colorado. And it basically is, my understanding is that it's kind of like an identity theft agency. So it's supposed to protect against identity theft and things like that. And if you look at their metrics, you see over a month they did very well. 3 months they could have done better, but they barely lost anything. And over a year they did 26%. And this 5 years you see is blank, but that's because they weren't trading for 5 years. But this by far, if we're talking about, if you go on Robinhood and look at the curve, Ping Identity seems to be one of the most sustainable ones that's on there. So next, we're going to go to Axon Therapeutics. So Axon Therapeutics is, I would consider it sort of not only a black owned stock, but also a socially conscious stock to invest in. Because not only is it in the healthcare industry, but they are developing breakthroughs in conditions that have to do with the central nervous system, where it's limited treatment options. So things like ALS, multiple sclerosis, things of that nature, Alzheimer's disease, any type of neurological disorders, they have actually invented drugs to treat that. And next, we have Global Blood Therapeutics. And Global Blood Therapeutics is probably one of my favorites as far as the good work that they do. It was founded by Ted Love, and it's in San Francisco. Um, and my understanding is that they invented a drug to treat sickle cell. You can see right here in 2017, GBT has come a long way to gain oxybate approval for treating sickle cell disease. Um, and then Seeking Alpha talks about how it had over 100% capital gain. So at one time it was growing very, very quickly. Then it kind of started to slow down, but it's still a really good stock, and it would be something that'd be interesting to hold on to, especially during the pandemic. Now you see it over 3 months, over a year hasn't done so well, but over a month and over 5 years it has. Global Blood Therapeutics is more of a long-term stock. So that's why I would say if you want to invest in Global Blood Therapeutics, you need to do it for the long haul. It's not a stock just to invest in for a few months to make a gain. You have to hold it on a more long-term basis. So next we have Harmony Gold. So Harmony Gold, it has a unique position of being one of the few black-owned gold mining companies in the world. But this particular company is based in South Africa. Let me make sure I have the right one. Okay, here we go. So if you click on its Wikipedia page, it talks about how it is the one of the biggest, actually it is the biggest mining company in South Africa. And you see under key people they have Patrice Motsepe, who is the chairman, and Patrice Motsepe is the founder of African Rainbow Minerals. So that was the first major black owned mining company in South Africa right after apartheid. And African Rainbow Minerals merged with Harmony Gold. It says ARM, African Rainbow Minerals, owns 20% of Harmony Gold. So and it is the 12th largest gold mining company in the world. And ARM was founded by Patrick Motsepe as South Africa's first black-owned mining company. So if you want to invest in a black-owned mining company that's operating in Africa, Harmony Gold is probably going to be your best bet. Now, these last two are what I call, kind of the iffy category because while they have a lot of black ownership, they're not completely black owned, especially AngloGold Ashanti. So AngloGold Ashanti was founded through a merger between Ashanti Goldfields. Let me look it up right quick. I believe it was a Ashanti Goldfields and the AngloGold Company. Yes, it was formed in 2004 when they merged AngloGold and the Ashanti Goldfields Corporation. And the Ashanti Goldfields Corporation was owned by the government of Ghana, which is a country in West Africa. It was founded by Joseph Ellis and Joseph Benny. The Ghana government in 1994 announced plans to sell 20 to 25%, and it said that it succumbed to an ill-executed price hedge led by Goldman Sachs, which drove it to the brink of bankruptcy. And so it had to merge with AngloGold in order to not go bankrupt. But it was the largest black-owned mining company in the world up to that time. And if you read articles about the gold price hedge and how that was handled, there were a lot of European banks that was involved in that. But basically, Ashanti Goldfields uh, kind of got baited into hedging their money in a way that resulted in them going bankrupt, and then they had to merge with AngloGold. Then you have, last but not least, Jumia Technologies. Now, Jumia Technologies has been deemed the Amazon of Africa. So if you think about Alibaba in China, Amazon in America, Jumia is where you ought to invest. And the reason I say that is as the internet expands in Africa, Jumia is only going to get better and better. Look at these metrics. You have, after a year, 600% increase, 3 months, 250% increase, and 1 month, 21.98. In fact, there's no reason not to invest in Jumia Technologies. Now, Jumia, you see the CEO is Sacha Point, no, I'm probably saying his name right, and Jeremy Hodara. So then you look at the founders and you see Raphael, Kofi, Afidor, and Tunde Kahinde. So those two men were African, Raphael and Tunde, and Sacha and Jeremy were French. So it was a joint venture between I believe France and Nigeria, something like that. So when you include all of them together, if you were to put the same amount into all of these stocks, you would find that after a month you would make 10% profit. After 3 months, 33%. So that means over the past 3 months. Now, this data is current as of a week ago, so some of this may have changed, but these numbers in the long run, you have to do your own research. But I received all these numbers from Robinhood. And when I say do your own research, just make sure to not just go off of this chart. Make sure to go and look at the percentages that are here now, because something could have taken place over a week that may have changed some of these numbers. And then you see in the 5 years you have 166% growth, and so it's outperforming the market, consistently outperforming the market. But you have to understand, this is just 1 month, 3 month, 1 year, 5 years. 3 years, I don't have enough data. It may have underperformed. It may have underperformed over the past 6 months. So you won't know, it's hindsight bias. These stocks may not necessarily do as well in the future, some of them. So that's why it's good to diversify. And so I figured that since this is 10 stocks, it would be easy to diversify. If you decide that you want to have a black owned portfolio to support black owned businesses, I would suggest putting equal amounts of your money into RLJ, the two urban ones, Broadway Financial, Ping Identity, Axon Therapeutics, Global Blood Therapeutics, Harmony Gold, AngloGold Ashanti, and finally Jumia Technologies. We also have a lot of diversification. If you notice, Jumia is a tech company, and so is Ping. So is Ping. So you have two tech companies. You have two gold companies. All right. So 20%, because 2 out of 10 is 20%. 20% is in technology. 2 gold, 2 out of 10, 20% is in gold. So we could just type it out right here. We have 20% tech, 20% gold. All right. And then we have your 2 urban ones, 20% telecommunications, telecom for short. Then for financial, I guess the other 3 that's left, let's see. Okay. 20% in healthcare because you have Axon and Global Blood Therapeutics. So 20% in healthcare. So this is really good. And then you have 10% in real estate because RLJ invests in hotels. That's the one that's owned by the founder BET. So 10% in real estate. And then last but not least, you have Broadway Financial, which would be 10% in finances. So you have a decent amount of diversification, even though it's only 10 companies. Like I said, you have a lot of buffering in your portfolio because you have 20% in gold, you have 20% in tech, then you got telecom, you got healthcare. So 60% of your portfolio is technology, healthcare, and gold. That's pretty good. Then you have real estate, telecom, and finance that can serve as a hedge if tech is not doing so well. And even in times where gold is not doing good, you may have better luck with healthcare or better luck with telecom. So this is a fairly diversified portfolio because it's in different industries. There are other black-owned stocks on Robinhood that you can get, but they don't have fractional shares. So these are the black-owned stocks that I could find that have fractional shares. You may have heard of NACP, the NACP fund, which is Impact Shares NAACP Minority Empowerment Fund. The issue with that is they don't allow you to buy fractional shares. And when I say don't allow you, it's not like they making it a rule. It's just that because there's so few people buying it, unfortunately, because there's so few buyers, they cannot make it fractional at this time. So as a result, I would say if you do NACP, which has been outperforming the market, so this would be something good to add. Um, if you are able to buy whole shares, if you have a lot to invest, then I would definitely consider maybe adding NACP to this list, maybe doing a portfolio that is about 50% NACP, and then each of these stocks you put 5% into each one, and then you can consider that, you know, a black owned stock portfolio. So it's all kind of different combinations that you could have, but that's basically, I just wanted to make a video to kind of clear things up because I was looking for videos on YouTube about different black owned stocks, and even though they had black owned stocks here and there wasn't really any video on YouTube about each one in particular, listing all the details. It wasn't anything where, somebody had laid out in a spreadsheet and just talked about each one individually. So I felt like I just wanted to do that so that people could look at my video, and if they wanted to invest in a black owned portfolio, not only would they have the resources right here and the knowledge, but they could also see that it actually pays well because these have actually done consistently better than the market. It just so happens over these past 5 years. And so that's very, very important when we're talking about socially conscious investing and investing in black owned businesses. I think this could really help people get involved and start expanding the Buy Black movement where more people are involved and are willing to invest in these companies. And maybe one day they'll establish a ETF or a mutual fund that invests in black owned companies. But until then, I would say that your best bet is finding different black owned stocks, as many as you can, and just putting an equal amount in each one. Because like I said, you put an equal amount in each one, you tend to have decent performance, and then you don't have to worry about putting too much in a stock that doesn't do so well, or putting too little in a stock that does very well. So by equally weighting it, you kind of avoid that type of dilemma. So anyway, I just wanted to share that with y'all about black owned stocks and how you can set up your portfolio and things of that nature. Now, if you notice right here, I have market cap. Let me zoom in a little bit so you can see. Okay, you see how I have market cap right here? You can market cap weight the index if you would like, but I like equally weighting because it allows you to be spread out in different ones. Now, one thing I'm going to tell you about Urban One spiked on two different dates. After the George Floyd protests, Urban One spiked, and after the Capitol riots, Urban One spiked. So it's very interesting. Whenever you have major events like that, um, you have people buying stock into Urban One. And so with Urban One, I think that went up a lot because of what Killer Mike statements of the statements Killer Mike made after they had started having riots in Atlanta. He told the people to go home and to be peaceful and to realize that if you're going to have another Black Wall Street, the closest thing to it that currently exists is in Atlanta. And he was saying, he established Greenwood Bank, which Greenwood Bank, if y'all don't know about it, is an online black-owned bank that Killer Mike founded that is named after Greenwood, which was the area in Tulsa where Black Wall Street was in 1921 before it was destroyed. So just to give you an idea of that, I think Killer Mike saying that after the protests and after some of the riots that inspired people to start buying black, start investing in black owned companies, and then they found Urban One, especially because TV One is all over the nation now. So it's more awareness being brought to this. But I just want people to understand that it's all kind of other black owned stocks that you can invest in. And the more you diversify, the better you'll do. If you look at the portfolio backtest, which will tell you historically the returns of different investments, you'll see what I'm referring to. So what I'm going to do, I'm going to show you the returns on here. So you have VOO, this is the market, and we're going to make a portfolio that's 100% VOO. So that means if you had bought an S&P 500 ETF, this would be 100% VOO. So we're going to list it like this. Ping, we're going to have Axon, we're going to have Global Blood Therapeutics. This is the first Urban One, the second Urban One, and then of course you would have AU, AngloGold Ashanti. There we go. Harmony Gold. Oh, is the other one. So don't get confused. There are two different Harmony Golds. So this one is correct. HMY. I just want y'all to know that. So that's why I put the tickers by it. So don't get confused. Make sure that it has the same ticker because there are two Harmony Golds. Okay. So then you have, which one am I missing, y'all? Broadway Financial. Jumia. That's right. Jumia. Jumia is a really big one. If you don't have anything in your portfolio, please, get Jumia. That's one of the best ones. So I think it may be one that we're missing. RLJ. That's right. So we have 10 stocks uh down here and that one market stock. So we do 10% in each one. And then that will get us to 100%. And actually, I'm going to show you the breakdown of it once we click analyze. it will show you exactly what the outcome would be. At least, over the passage of time. Of course, this is hindsight. So past returns is not an indicator of future results, just to let y'all know. But this at least give you a decent snapshot of what will go down when you invest into this pie. So portfolio 2 is the red line. Portfolio 1 is the blue. And as you can see, the blue is the general market. The red is the black owned stocks. So let's look at portfolio 1. And actually, let's look at when this was from. So this is from January 2020 to December 2020. So this is across the year 2020 with coronavirus and everything. So if you had invested in the S&P 500 on January 1st and you had held it until the end of December, you would have, I'm not sure if January 1st was a trading day, but my point is, if you had it from the first trading day of January into the last trading day in December, and you had invested $10,000, you would have 11,829, and your return would be 18% roughly. But portfolio 2, you would actually have 15,500, and your return would be 55%. So that's a big difference. But notice the standard deviation and the drawdown. So portfolio 1, it only fell by 20% even during the pandemic at the very height of it when they had the crash in March. But you see that this fell by 40%. So you do have to have a tough stomach to deal with some of this, especially when you look at the standard deviation. So it's much more volatile. So that's what I have to tell people. It's much more volatile. But look at the market correlation, 0.27. So what this means is that the market really doesn't have any indicator over how this portfolio is going to do, which can be a good thing and a bad thing. If you notice, it was underperforming until when? Until when? Between May and June. So we'll say like June 2nd, June 3rd, roughly. I'm just estimating really. And so look at the chart. So y'all could look at this and see. So this is the chart. 10% in each one. And this is the results. So just keep that in mind when you're thinking about investing in black owned companies. Like I said, if you wanted to even out this volatility, you could add NACP. And that's actually what we're going to do. That's what we're going to do. We're going to add in NACP. And what we're going to do is we're going to put it at 50%. And then the rest we're going to take down to 5%. And I just want to see what impact that has on the volatility. This may have the effect of reducing volatility significantly, while at the same time you're getting better results in the market. And in fact, I think that would be the best. Like I said, it's sad that they don't have fractional shares at this time. But definitely when they get fractional shares, I am probably going to make another video about, adding it in and seeing how it plays out. So let's analyze that portfolio. So January 2020 to December 2020, once again, make sure that when you're comparing portfolios to each other, you use the same dates roughly. So now we see we got our 50% NACP and 5% in each one. So you see this right here? So we actually get it a little bit better. Notice that the slope is kind of the same, but even though the return is a little bit lower, it's still much higher than the general market. We still at a 40.6% return compared to 18.2% return. And we have higher drawdowns. So we're drawing down a little bit more, but at least this is much better than negative 40, So you see the gap between these drawdowns closed. So you probably would be able to stomach this risk. Look at the Sharpe ratios. They are close together. Standard deviations are much closer together than the previous one that was at 155. And you see what the market correlation is. So if you want to have less volatility, increase your share of NACP, and then all the other 10 components, you just adjust them accordingly, but equally weight those components. Okay. But if you want to have less volatility, just increase your share of NACP. So I would recommend, my personal recommendation would be, if you can, do 50% NACP and 5% in each of the remaining 10 stocks. That would be my personal recommendation. So my personal recommendation, you want to take a picture, whatever, in the video, this would be my personal recommendation. Portfolio 2. That would be my personal recommendation, if at all possible. And if you're talking about investing, let's say that you have $1,000 to invest, right? That you want to invest in black-owned stocks. I'm going to look at the price of NACP right now, $29.42. So if we're investing 50% in, right, which would be $500, divided by 29.42 equals 16.995 shares, right? So basically, just buy 17 shares, y'all. Just buy 17 shares, because like I said, just round it up. Just round it up. So that's $500.14 you would put it in NACP, and then the remainder, which would be $499.86, you would just divide it by 10. $499.84. No, 86 cents. Divided by 10. What you get? You get $49.99 basically. So you would just invest $50 into each one at that point. And then one of the stocks, you would invest a little bit less, a few cents less than $50. So what I would recommend is, when you have to invest a few cents less, just invest a few cents less in one of the urban ones, because you already got 2 urban ones. So just randomly pick between the K or the one without the K, because it's basically going to be the same thing. It's only a few cents difference. But that's what I would recommend, just so you get the most benefit from all the other stocks. So that's the portfolio that I would recommend. Approximately 50% of whatever you're investing in NACP. And then whatever is left over, you just try to split 10 ways across these 10 different stocks. And that's how you would set up. That would be my recommendation for a successful black-owned portfolio. So I thank y'all for listening. I'm going to stop sharing right quick. I thank y'all for listening, and I'm going to be coming at y'all with another video about investment as well. So hope y'all have a good one. Stay safe out here, and I'll see y'all later.